with Premier Life and Annuities National Marketing Director. And first and foremost, I want to thank everybody for taking their time to be with us today. Today we've got a tax-efficient asset transfer program with Baltimore Life. With the interest rate environment where it is and with qualified dollars, if you've got any clients that have qualified dollars that they're not using for income, there's a great opportunity here with the Generation Legacy product. I don't want to steal too much of Gary's thunder, so I'm going to pass it over to Gary Boyth, Vice President of Sales there at Baltimore Life. Gary, thank you for being with us today, and I'll let you take it away.
Hey, Brian, thanks so much, and good morning, good afternoon to everyone. Gary Voigt, as Brian said, I'm Vice President of Corporate Marketing and Communications at Baltimore Life. I want to thank you today for investing some of that very valuable time you had to learn more about our tax-efficient asset transfer program. I think today we're going to be talking about two of our products, as Brian alluded to, our Generation Legacy and Single Premium Whole Life product. Both products are really designed for your senior clients who have what we like to call that leave behind money, money they'd like to leave behind to the next generation, but maybe significantly increase the amount of money they can leave behind in a tax-efficient way. The great thing about the session today is no matter where your market focus is right now, whether you're an annuity producer, whether you're an agent who's selling final expense, you're doing estate planning, whatever market focus you have, I think we have some ideas for you today on the sales idea, marketing side of this, to help you as well, and I believe both of these products can fit into the markets you're working, especially if you're working in the senior marketplace. Before we get started, let's talk a little bit about the transfer landscape out there. It's huge. $1 to $3 trillion in wealth being transferred each and every year between now and the year 2052. Over half that money, 55% of your clients' wealth at death is moving on to their heirs. And yes, 16% of the money is moving on to their favorite charities. So 71% of their wealth is moving on to people and organizations they know and love. The question is, are they maximizing the amount of wealth they can pass on, and are they doing it really in the most tax-efficient way? Well, the first product that we're going to talk about is our Generation Legacy product, and it really is a single premium product designed to take single premium dollars from non-qualified deferred annuities and other qualified plan funds, 401ks, 401(3)bs, IRAs, and the like. But this is, of course, money not needed for daily living. It is allowing your client to create or leave an estate to the people and organizations they know and love, do it tax efficiently through life insurance, and of course, with that single premium, they're creating a bump or increase in estate value immediately upon issue. The issue age for this product is 60 through age 80, and a lot of people say, well, why do you start as late as 60? Why not sooner? Well, of course, you're working with people that have qualified funds thinking about retirement, and really, until you get past that 59.5 penalty rule, right? You hit age 60, that's when people start making some real decisions about their retirement dollars. So 60 to 80 are the issue ages. This product, though, is very unique. It combines two products issued with a single application, a single premium immediate annuity that will take the transfer of the funds, and then also at the same time we issue a limited premium payment whole life product. That provides that bump in estate value for the client through a life product. On an annual basis, as you're going to see, those premiums come from the SPIA to pay the life insurance product. But it's a single app. Both products are issued, and they're seamlessly administered together by Baltimore Life for your client. Nothing has to be done by the agent or the client. Also, our product is unique because it sits on a whole life product, not a UL product as some other companies might have. We have simplified underwriting on this product through 4 tables. We'll get into that. And also our accelerated death benefit rider. We'll get into all the details. So a little bit about the qualified market. There's roughly $2.3 trillion in in-force deferred annuities out there. And as you know, about 60% of that money is in the tax qualified side, the 401ks, IRAs, 403bs. 40% is in the deferred annuity, non-qualified deferred annuity side. But as you know, a significant share of this money will never be annuitized. It's simply going to be transferred to the next generation. So think about this. If the client doesn't need money, of course at 70 and a half, they're going to have to take a required minimum distribution, right? If they decide to cash out, they're going to pay tax on it while they're living. Or if they die, they're just simply passing along the tax burden to their heirs. The question, annuities are fantastic products. Grow at a rate of return. It's tax favorable. But is it the best product to die with? It's a great product for income, but is it the best product to die with, especially when you can increase so significantly the amount you can pass on? And that's why we're going to be talking about generational legacy as a solution today. So let's think of generational legacy or any single premium product as a gift you're going to pass along to the next generation. And for generational legacy, you're going to be transferring for your client qualified funds into that gift box. Inside the gift box, we issue two products, as I mentioned, with one application, a single premium immediate annuity along with a limited premium payment whole life product. Over a period of either 7 or 10 years, depending on the issue age of the client, we will automatically make annual premiums from the SPIA to the life product. What dictates that payment pattern? Its issue age. If the client's 60 to 74, we issue a 10-year SPIA along with a 10-year limited premium payment whole life product. If the client's 75 to 80, we'll issue a 7-year SPIA along with a 7-year limited premium payment whole life product. So here's another great thing about this package. What if the client were to die during the period while that SPIA is around funding the life product? Well, we know that the life insurance will always pay an income tax-free death benefit that's significantly greater than the single premium paid, right? But with this product, you will also see that the proceeds or the remaining payments from the SPIA that aren't used to pay for the life insurance will also be paid to the beneficiary. Now keep in mind, when the Benny receives those remaining payments from the SPIA, they are obligated to declare the gain that has not been taxed before when they receive those funds, and we'll talk about that. But the beauty of this product is some other companies that have it, basically you get the life insurance and not any remaining payments from the funding vehicle. With our product, you get the life insurance income tax free and the remaining payments from the SPIA as well. Now at the end of that 7 or 10 year period when the life product becomes paid up and the SPIA goes away, it's done its job, the life insurance now has a paid up benefit. It also has what? Cash value that accumulates on a tax deferred basis, an income tax-free death benefit greater than the premium paid, and also that accelerated death benefit rider. So great gift package that you're leaving to your heirs. So just to recap, issue ages are 60 through 80, and we base our pricing on current age or age at last birthday. Now, because you're going to be getting transfers of funds from other institutions, transfer maybe 20 to 40 days to get the funds over, we will issue the policy based on the age the client is the day we receive the funds. We can't backdate, so please keep that in mind. The minimum premium, it's only $5,000. It doesn't take much to get this started. How many small annuities are out there where the client just knows that they have no plans to annuitize? They just want to pass it along. The average premium, though, we see on this generational legacy product is $60,000 to $65,000 in premium. That's the average, but the minimum's $5,000 to get started. The maximum face amount that we'll issue on the life product for the single premium paid is $450,000. You got to put a lot of premium to hit that ceiling. The underwriting classes, we have two. We either issue non-tobacco and tobacco for any underwriting risk standard through Table 4. Cash values, they accumulate in the life insurance product on a non-participating basis. Partial surrenders, they are available from the life product after the life product becomes paid up, 7 or 10 years. Loans, though, are available at any time from the available cash value from the life product at an interest rate of 8%. So what about the accelerated death benefit rider? Now, the one thing I want to make real clear here is that long-term care insurance is the absolute best solution for a client who can afford it and needs long-term care protection. But with these riders, This basically is a great opportunity for clients to take death benefits in advance to help offset end-of-life expenses. And knowing the cost of long-term care insurance today and what it is, most seniors, it's out of reach, right? So here it's at least a mental safety net knowing that if they get in that situation where Medicare stops paying in a long-term care scenario, they've got benefit or cash that's going to be there and available in certain circumstances. So the 3 health event triggers that will allow that client to accelerate the payment of the death benefit of the life product are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care and adult daycare. This is, of course, attached to the life product face amount, and upon the decision to accelerate, a lien for the amount of money taken will accumulate at an interest rate of 8%, and that would simply be deducted from the death benefit at the end. The maximum that you can accelerate is $250,000. The minimum is $5,000. But the good news is the benefit is paid out once, and it's paid out in a lump sum. That way your client has cash again at a time when it's needed most. So let's take a look at these definitions and the percentages of payout. The first one is terminal illness. Simply put, the client's doctor says they're diagnosed as terminal with 12 months or less to live. And in this case, they could accelerate up to 75% of the face amount of the life product it's attached to. The second rider covers qualified nursing and extended care. So for qualified nursing, it's simply saying the client is chronically ill, confined to a nursing home continuously for 90 days with the expectation of a permanent confinement. And in that situation, they could take up to 50% of the death benefit. In the extended care, again, they need to be chronically ill, have been so for 90 days, but now they're requiring care provided by a licensed home health care agency or a licensed or state-certified adult daycare. And here again, they can accelerate up to 50%. Now, you will note at the bottom of my screen, in Pennsylvania and Indiana, those accelerated numbers are a little bit lower based on those state forms. But basically, these riders are designed with one simple thing in mind. We're going to provide some cash now to help for end-of-life expenses, but in most all cases always have remaining death benefit. We'll talk about that. So what do we mean by chronically ill as it applies to nursing home confinement and extended care? Well, the first definition says if a client can't perform 2 out of 6 activities of daily living, they're chronically ill. The second definition, let's say they're fine on their ADLs, but now maybe they're suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we consider them chronically ill. So just to recap, upon the decision to accelerate, a lien for the amount of money you've taken, plus a $100 service fee one time, will accumulate at a rate of 8%. And at death, we simply take the face of the life product minus the lien and the interest to give you a remaining death benefit. Always remember, though, and as I talked about earlier, the life insurance benefit is always income tax free, but the remaining payments from the SPIA would be paid out, at death as well. But if the client accelerates this benefit during the time while the SPIA is around, we will continue making payments each year from the SPIA to the life insurance product. That happens, until the product becomes paid up, or the client dies and we pay out the remaining death benefit. But automatically those SPIA payments will continue regardless of the client's decision to act on the accelerated benefit. And the benefit can be accelerated starting at issue, so there's no waiting period. So here's some examples of how this might work. Here's a client who has a $100,000 face, and they're terminal. So they can accelerate up to 75%, and they do. They get a cash check for $75,000. The lien starts out as $75,100. So now, if they were to die right after getting the money, no time for interest to accrue on the lien, the remaining death benefit would be $24,900, the face less the lien, because there's no interest at this point, right? But more than likely, this scenario is going to happen. They're going to die 1 year after getting their $75,000 check. So now the death benefit becomes $18,892, which is simply the face less the original lien less 1 year's worth of interest at 8%, and that gives you the remaining death benefit. Now, these riders, because it's two, one for terminal illness, the second for nursing home and qualified and extended care situations, when would they terminate? Well, if for some reason the whole life policy ends, technically these products can be decoupled, so to speak, and you could stop the whole life policy. Or if the insured dies, we pay a death benefit, right? Or if you accelerate under one of the other riders. Let's say you accelerate under the nursing home provision at 50%. That's it. You can't accelerate again. Now, the other scenario where we would have a termination of the riders is if for some reason the lien exceeds the remaining death benefit. Extremely unlikely. The scenario I showed you with terminal illness, that client would have to live over 4 years in order to outrun the remaining death benefit based on the interest. Very unlikely the client's going to live 4 years while being terminal. So that's why we price and set up the payouts the way we do, because we never want the lien to exceed the remaining death benefit. But in that very, very unlikely scenario that it does, the owner may elect to repay all or part of the lien at any time to keep it qualified as a life product. Keep in mind, even though you accelerate this benefit, cash values do accumulate still in the policy, tax deferred. And the other key thing to remember is you can never have a lien and a loan going on in a product at the same time, one or the other. But the key thing to remember, no matter whether you're selling our product or any company's product with an accelerated death benefit rider, please make sure you tell the client to consult with their tax advisor. Because technically these benefits may, keyword is may, be considered taxable as a living benefit in certain situations. So here's a quick example of potential payouts. Female 70, non-tobacco user, has a $50,000 premium. They get a death benefit at 70 of $78,451. How long is it going to take them with fixed interest rates to get that type of a bump in their estate value with leave behind money? It's pretty significant, isn't it? But if they had to accelerate and they really needed cash for terminal illness, they can get 75% or $58,838. If they're in a nursing home or an extended care, they can pick up 50% of that base, or $39,225. So it is a very powerful statement to make, to be able to know that, God forbid, you really needed the cash, that the cash can be taken in advance as a living benefit. So we know that one of the key tax efficiencies of this program is the life insurance benefit, right? It's income tax free. But what about another tax efficiency? When you're rolling over qualified funds, either from a non-qualified deferred annuity or a fully qualified plan, you're either going to have money that you're rolling that has never been taxed before, fully qualified plan, or you're going to have a cost basis on an annuity that you're rolling over, and a part of it has never been taxed before. The beauty of this product is when you roll the money, you're rolling it into essentially a qualified SPIA, and that SPIA is going to make payments to a life product over 7 or 10 years. So as a result, your client we're able to spread out for them the tax on that money we roll. So instead of getting hit all at once, now they're only going to get a 1099 for a portion of it over 10 or 7 years. I'll show you that more in a minute. The other thing to remember is that if you're rolling qualified money, the payments we make each year from the SPIA to the life product do satisfy the RMD rules. The other quick thing to remember is that if the client dies while the SPIA is around, we said the life insurance is income tax free, but the remaining payments from the SPIA would be taxable in the amount that has not seen tax before. Now the default with that SPIA payout is annual. So if you had 2 years of premiums paid on a 10-year product, that means we'll make 8 more years of annual payments to the Benny, and they would get a 1099 based on the gain. But the Benny could say, you know what, I want a lesser commuted lump sum of that money, and we would do that for them. But again, they would get a 1099 based on the distribution they elect. Now, one other quick thing on tax, and that is when you apply for this product. Because we're dealing with qualified funds, we have to ask the question, do you want tax withheld from the money we're rolling over? But we've designed this product and will only issue it if you check the box that you do not want tax withheld from the money you're rolling. the product doesn't work if you say, we want to check the box that we want tax withheld up front. We'll send the check back to you. So please make sure on the app you check the box that you do not want tax withheld from the annuity. I mean, after all, you're defeating the purpose of being able to spread that tax out over 10 or 7 years, of course. Now let's look at some examples. And I want you to start thinking, especially if you're an annuity producer or done good fact finds, because this is all about doing good fact finds and finding the money, right? So let's think about those clients out there who have that leave behind money in an annuity that you can roll. So here's a 65-year-old, 50 grand non-tobacco user, and because they're 65, we're going to issue a 10-year SPIA along with the 10-year limited premium payment whole life product. For the male, we're issuing a face amount of $77,361 and change. For the female, they're getting a face of $87,031 and change. So what did you just do for the female 65? With 50 grand, you immediately bumped her estate at issue by $37,031 and change. Not forgetting that if she dies during the 10 years while the SPIA is around, the remaining payments from the SPIA would also be paid. Clients get excited about this. Now, if they start saying to you, well, I think I could, if I kept the money in the annuity and I'm in a 25% tax bracket and I'm making 3% on the money, well, guess what? If those were the scenarios, it's going to take them over 19 years just to get the $87,031 that the life insurance provides. 19 years to see that type of growth in a low interest rate environment. If they put it in a taxable investment, it takes over 25 years to do the same thing. The beauty of what we sell and what you sell out there, life insurance, the $87,000 plus is income tax free. Now let's look at the 75-year-old, a little older, a little shorter life expectancy, but it still looks pretty good. 75 non-tobacco with 50 grand. Because they're 75, we're going to issue a 7-year SPIA along with a 7-year limited premium payment whole life product. For the male, the face is $61,516. For the female, the face is $67,000, nearly $9. So you bumped a 75-year-old estate by over 17 grand. And for the male, you bumped his estate nearly $12,000 at 75. I can guarantee you this, when you sell these cases, those senior clients of yours who have coffee at the McDonald's in the morning with friends and the Bob Evans having breakfast, this is going to be the coffee talk. And if you work it, you're going to have a great opportunity to get some fantastic referrals. All right, let's look at this screen, and what it is essentially is a screenshot of part of our proposal software. Now this is a non-illustrated product, no signed illustration is needed, but if you go onto our website, you can go to our Secure Solutions Illustrator software and generate a really nice proposal, description of the product and some ledgers. But here's where this product where it really works well. The ledger with a 7-year-old non-tobacco who, let's say, rolls an annuity with 50 grand and a cost basis of 40, you can see in the ledger in column 3, there's the 50 grand going in. And from the 50 grand, we're going to make an annual payment from the SPIA each year of $5,570. Out of that money, though, nearly $4,000 of it is excluded from tax. That's their basis. And the client would have a 1099 each year in the amount of approximately $1,571. So the $1,571 is what you want to make sure your client understands. They're spreading their tax out over 10 years, but they're going to get a 1099 each year for $1,571. Of course, the ledger goes on to show the death benefit and the commuted lump sum of the remaining payments from the SPIA if death occurs during those years. So it's a great way to show the ebb and flow of the money. What about submitting business? Let's keep this very simple when it comes to forms, because now you're dealing with transferring funds and annuities and suitability and all that kind of stuff, right? So if you go to our agent website and you go to the Generation Legacy Product Toolkit, it's right on the home page. When you go in that toolkit, and we'll talk more about the toolkit in a minute, at the top of the toolkit, you're going to see the printable application and forms package. You answer a couple of quick questions, and it will generate your forms package for you. You can print it. You can order a supply of forms for us, whatever you need. It's also going to print out with the forms package a set of instructions on the process of submitting business. We're going to talk in a minute about our point of sale underwriting process, where over 90% of the time we're going to be able to give you an underwriting decision right there before you leave the house. It goes through and shows you how to fax the business or email the business to us as well. So in the toolkit where those forms come from, we'll talk more about this later in the marketing part of the presentation, but we've got a lot of great tools for you. We have our Agent Underwriting and Product Guide, which is essentially the Bible for the product. You can print it, you can save it as a PDF, and coming up later this year, you're going to be able to have the Agent Guide essentially on your smartphone or your smart tablet. All right, we're working on that. We have our proposal software. We have 4-color client brochures that you can order from us, and a number of other tools, letters, phone approaches, third-party articles, consumer ads. And we also have this software called Secure Solutions Presenter that I'm going to demonstrate in a minute. So that's Generational Legacy. Now let's talk about the second product, and that's Single Premium Whole Life. This product has the same goal for your senior client. They have leave-behind money they don't need to live on, they want to leave behind. But the one difference with this product is that it's originating from funds coming from after-tax cash dollars. CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life exchanges. You do not want to put qualified money into this product. This would be for after-tax cash funds. Same goal, though. Client wants to leave a legacy, bump or increase their estate value with that single premium. But because now you're working with after-tax cash funds, no pre-59.5 penalties, the issue ages are a little broader. We start at age 50 and go as long as age 85 for this product. We have simplified underwriting, a little different on this one. We go through 8 tables. We'll talk about that. And finally, we have that accelerated death benefit rider. Same health event triggers to get the money, little different payout percentages, and I'll talk about that in a moment. So 50 to 85 based on current age, 2 tiers of underwriting. Level 1 is standard through Table 4, same as you have for Generational Legacy. But Level 2 is another table, 3 tables for you, Table 5 through Table 8. So clients with a few more challenging health conditions can get this product. Underwriting classes, both non-tobacco and tobacco again, and the minimum premium, again, is only $5,000. How many small CDs and money market accounts do you run across if you're doing fact finds that seniors have? I work a lot with final expense producers who says, well, you know, I don't have any annuity dollars to roll into these products. You know, I'm doing final expense business. Well, what if you run across the senior who says, you know, I don't need any life insurance. I have a burial account. Well, that burial account means one of 2 things. They either have a prearrangement at a funeral home, or a $15,000 CD at the local bank that their kids know that's the money to use to bury them. Well, Mrs. Jones, you're 70. Costs are going to go up. What if we were able to take that $15,000 burial account and hypothetically give you a $24,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you can get at some of that money to help pay for your end-of-life expenses. Do you think people take interest in that? Absolutely they do. And this is a way to use the burial account concept, even if you're selling final expense business today, to get started. I can't tell you how many agents we've got started this way, where they sell 5s and 10s and 15s, but then we're showing them ways to start asking the right questions and fact finds in a way to generate bigger and bigger premiums. The average premium we see on this product is $30,000 to $35,000. Now, I'm going to give you another quick prospecting tip before I go on. It's called, and many of you might be using it, it's called dollar dating daily, at least what I call it. If you're familiar with the property and casualty business, they X-date, right, based on renewal dates of auto and homeowners insurance. Well, why not when you're working on the phone or with a client, you X-date their CDs? many agents do this, right? You build up a nest of X dates on CD renewal dates, and you say, Mr. Jones, you have a CD? Yes, I do. When's the next one come due for renewal? Comes due in September. Great. What if I was able to show you a way that, and you talk about features and benefits of a single premium product, do you think I could give you a call about 30 days before that comes due for renewal so that I can share that idea with you and personalize it a little bit? Sure. So you start building up a nest of these X dates for CDs, and you're going to find that the X dates are going to become significant. And each month you're going to go into the month with a number of people that said, call me back to talk more about this. And you'll start to be able to predict, if you have 100 X dates for that month, how many appointments you're going to get, how many sales you're going to make. It's a great way to turn a no on the phone to a possible yes going forward. What's the maximum face amount for this single premium product? Well, it's expressed in terms of the maximum net amount at risk. And that's really the difference between the face amount and the premium paid. The difference is the net amount at risk. This is the table that shows you, and it's in our agent guide based on age and underwriting class, the maximum amount that we'll issue. The maximum premium that we'll accept without prior underwriting approval is $500,000. That'd be a good problem to have, wouldn't it? Cash values, they accumulate in the life insurance product here on a non-participating basis, but here's another key difference with single premium whole life. Partial surrenders are permitted without penalty starting in the second policy year. So starting in the second year, you can take 10% of the available cash, all the way graduated up to the 6th year, where 100% of the available cash can be taken as a partial surrender. So even though you never want to sell these products with the idea that it's a bank account, you can put money in and take money out, seniors like to know that, hey, this is leave behind money. I want to leave it behind. I don't need it as income. But for God forbid the sky falls, can I get at my money? And yes, with this product, partial surrenders are permitted. Loans are available. Not really sure why you want to do that when you have such a liberal partial surrender capability. What about the accelerated death benefit rider? Again, the same 3 health event triggers you had for Generation Legacy are available for this product: terminal illness, nursing home, and extended care. It's accelerating the benefit. The benefit is paid out once, again, in a lump sum, so the client has cash at a time when it's needed most. But here's another key difference. This rider, you can either max out the payout and get all the money now as a living benefit with no remaining death benefit, or take a partial acceleration and leave some death benefit behind. So the definitions to qualify for each trigger are the same. So for example, terminal illness, 12 months or less to live. But now with single premium whole life, you can accelerate up to 95% of the face amount, less the $250 administrative charge. Now some people say, well, why only 95%? Shouldn't we get 100%? Well, when you're, as you know, advancing death benefit, there's a cost for money, right? Because we're paying it out essentially 12 months before we had to as a death benefit. This is pretty typical of companies that do this. So you can take 95% less $250, or say, you know what, I don't need all that cash now. Let's keep a certain amount of life insurance and accelerate the balance. So that's the difference, again, on how the payouts work with this versus Generation Legacy. Some people ask me, well, why do you have a difference there? This is a function of when these products were filed. This is an older product. The states were fine with this method before. And then when we did Generation Legacy about 4 to 5 years ago, they fell in love with the lien process. So just a function of how they were filed. Qualified nursing, same way to qualify, but now because the client's going to live a little longer, you can accelerate up to a max of 90%, less the $250 admin charge, or keep some life insurance and accelerate the balance. For extended care, same definition of qualify, but the client's going to live a little bit longer again, so the cost for money goes up again because we're accelerating a little bit sooner. So now it's 80% to max out, less the admin charge, or again, keep some life insurance. Definition of chronically ill, as it applies to the nursing home confinement and extended care, it's the same definition as we have for Generation Legacy. 2 out of 6 ADLs, or a client suffering from, let's say, Alzheimer's or dementia. All right, here's some examples of death benefit payouts. I want you to start thinking about those fact finders you're doing out there where you're finding this money, right? 65-year-old, non-tobacco, 50 grand. There's a lot of those 50 grand CDs sitting out there. For the male, at level 1 underwriting, we're going to issue a face amount of just short of $82,000. The female at that same underwriting level, they're going to get a face of just short of $93,000. But with this product, again, you have that second level of underwriting, Table 5 through Table 8. And what you're going to see consistently at all ages is that the face amount at that level of underwriting only reduces the face by around $6,000. It's not much, but you got that second tier to work with. It's great, right? Now, what about that client who's thinking, well, I could keep the money in the taxable investment and I'll do great there, right? Well, first of all, by putting the 50 grand in the life product, they're bumping their estate immediately by nearly $43,000. Not bad. And if they said, well, I could keep the money in a taxable investment at 3% and a 25% tax bracket, as Brian said, we're in a pretty low interest rate environment, so good luck getting 3% on safe money. It's going to take them over 28 years just to accumulate that bump, so to speak, we're giving them in the estate value. The death benefit, of course, it's income tax free. Now, this is the 7-year-old example. The 7-year-old example is showing a little shorter life expectancy, but it still looks good for the 50 grand for the non-tobacco user. The male gets a face of just short of $74,000, and the female a face of just over $82,000 at level 1 underwriting. And then, of course, that second level drops the face by about 6 grand. Now, something I do want to point out here that's very, very important to understand is that if you put 50 grand on the same client in Generation Legacy and 50 grand in single premium whole life, the ultimate death benefit of the life insurance will be greater, higher in the single premium whole life product than Generation Legacy's whole life product. And the reason is that with Generation Legacy, of course, we also pay out the remaining payments from the SPIA. But at the end of the 7 or 10 years, the face amount of the life product, when you compare them, is higher for the same premium, same person in the single premium whole life product. All right, so what about forms? It's the same story I gave you for Generation Legacy. Go to the single premium whole life application and forms package, answer the couple of quick questions, and it'll generate your forms for you. It's that simple. Print them, order quantity from us, whatever you need. We also have, a bunch of other great marketing tools, and I'm going to talk about those in a second. So what is, great products. Comp is great on this. Work with your upline at Premier. They'll talk about that. But what about the other thing that makes this so good? It's our point of sale underwriting. We had a bunch of annuity producers when we started this that said, I love this product, love the concept, but I hate life insurance underwriting. I don't want to have to start transferring funds unless I know what's going on, and I don't want to go through that process. Well, we said, what if we had a process where you can complete the app, and right after you take the app, do a short 12-minute interview with your client at point of sale, and over 90% of the time, we can give you an underwriting decision right there. They love it. These two products, for the last many years, have been our biggest selling products at Baltimore Life. So that's simple. Complete the app, do a 12-minute interview with your client at point of sale. They're going to be asking your clients the exact same health questions you completed with the paper app. The only difference is they're firing off in the background at our call center data they need to look at from the Medical Information Bureau and the RX. That way, if they see data that's conflicting with how the client answered the app questions, they can get clarity right then and there and make that underwriting decision. Once you've completed the interview, any underwriting decision is not communicated to your client. It's always communicated to you. We will also give you a confirmation number that we ask you to write on the first page of the app. Now, once the appointment's done, we always need you to email or fax the forms. All the app forms that you complete have to come to us. Now, when you print out those forms from the app package, it's also, as I mentioned, you're going to print out a set of instructions of how to submit business, how to call the call center, the hours, the phone number. But here they are. Toll-free 888-386-3737. 368-9678. The hours are 9 a.m. to 10:30 p.m. Monday through Thursday, as well as 9 a.m. to 6 p.m. on Fridays. These are all Eastern times. We do support English and Spanish languages. Other languages are available upon request. If you have a hearing impaired client, we have TTY services in English and Spanish. The key thing to remember is that this interview must be completed within 5 days of completing the app. Now, you might be thinking to yourself, you know, I'm sitting out on the West Coast. Hours are different than mine, and when I do business on Saturday. The call center's not open. Well, what do I do? Well, no matter when you complete the app, it doesn't matter. You should call the call center. When you get the voice prompt, you will leave your name, the client's, your name and number, the client's name and phone number, and a date and time you want us to call them. This works extremely well. We will call them back at the time you tell us to call back, get the interview done, and then call you again back with the underwriting decision and confirmation number. This works great. If you call during the normal hours, we get it done, we give you the underwriting decision. If for some reason we're just having a great day and the phone lines are jammed and you get a voice prompt, you have a decision to make. You can either wait and they'll call you back in 10 minutes or less at the number you gave us, or leave us all the information. We'll call the client back. You can leave the house, and we'll call you with the underwriting decision. Again, this works very, very well. It's our two biggest selling products. Agents love it. What about pre-qualifying business when you look at the apps? Well, because we have products that have two different levels of underwriting, we have two different apps. So Generation Legacy has standards through Table 4 underwriting, one tier as we like to call it. So the app has one section of medical questions, a Part A. If you get a yes in Part A, think of it as knockout questions. The client does not qualify through 4 tables of underwriting. But if you get all no to Part A, the height and weight is good, and you can find that chart in the agent guide. You have good MIB and RX, we're going to issue Generation Legacy. For single premium whole life, we have another app. But with that product, you have 2 levels of underwriting, standard through Table 4, Table 5 through Table 8. So you have 2 sections of medical questions. Here still, you want to think of the Part A questions as knockouts. If you get a yes in Part A, that client does not qualify through 8 tables of underwriting. But if you get all no in Part A and B, good height and weight, MIB, and drug history, we're going to issue Tier 1, which is standards through Table 4. If you get all no in Part A, but a yes in Part B, everything else looks good, we're going to issue Level 2, which is Table 5 through 8. So that is the information on the product. I'm going to shift gears right now, and we're going to talk some marketing in our remaining time with you today. So as I said, it's great to have great product. We know we do. We know that we also have great underwriting with our point-of-sale underwriting process. But what about marketing support? Well, first of all, your marketing organization, Premier, is the ace in terms of marketing support. You need help. Their internal wholesaler team will get you through this and really get you to understand how to leverage this product in the situations you're in the market you're working. But on our agent website out there, we have a lot of great tools that can support you as well. This is the home page of our agent website. We've talked about this. For every product you're contracted with us on at Baltimore Life, you will have a corresponding product toolkit. So you'll see those at the top in the little color squares. Also on our agent website, we have an agent dashboard. It's personalized to you so that if you need to know information on your pending, on your in-force, on your persistency, on your comp, all that is right there. And it not only gives you a top-line number, but you can click on the link and it gives you all the details that quick. Now, another thing we're going to be introducing to you a little later this year, by around summer, is something called our Agent Notification Program. So when you submit business, you're going to be getting emails or texts from us that say, we got your app. The phone interview has been completed. We're issuing the business. We're sending your policy. Whatever the underwriting outcome was or the activity, you're going to be prompted on your phone with that information. right? Or you can get it here. But when you click on those product toolkits, and that's what I want to get into now, it's just a wealth of information to help support your marketing. At the top of the page, upper left, we have that printable application and forms package. We have our state approval charts. Then you can get our forms, like the agent reference material. That's the agent and product guide and other stuff. We have marketing flyers I'm going to show you. We have other point of sale materials. And if you're recruiting a downline organization, we even have recruiting support materials. We also have our on-demand training library. If you need a repeat of any of this information today or other stuff, we have it there. We have our state replacement rules. You can register for other webinars. Or there's two other things here I want to talk about. One is our Illustrator software, Secure Solution Illustrator. That's where you can get your proposals, right under Tools. But then you see the two little blue bubbles. That's the first thing I want to demo for you, and that's our Secure Solution Presenter software. When you download from that link the software onto your laptop, it's going to create a shortcut that looks like those two little bubbles. And when you click on it, it's going to give you this menu. And it's basically a menu of great product presentations and financial concept presentations from Baltimore Life. So if you want to present, for example, Generation Legacy, it'll give you a sub-menu. Do you want to view the presentation on your laptop? Agents work with a laptop. They can show it right on the screen to their client. Do you want to print it? Because I don't work with a laptop. I want a hard copy of it. Or do you want to email it to your client in advance? Well, when you show it on the screen or use a hard copy, here it is. Great graphic presentation, explains the concept of asset transfer, who it benefits. It gives your client and you those key questions to be talking about in the dialogue of the presentation. Then it summarizes the features and benefits of the product so you don't miss a beat. Then we use the gift box concept. We happen to like that to explain how two products work together as one. It also then goes on to show a chart where you can really illustrate to the client based on different ages and genders the bump or increase they get in their estate value with that idle money, that leave behind money. So here they can see, exactly what their increase would be. We have examples, we explain the accelerated death benefit rider, and then we move on to an application. So that's an example of Secure Solution Illustrator. It's a great tool to help you at point of sale to be able to better tell the story, as we like to call it. Another form out there that I want to highlight is our asset transfer analysis form. This is a great way to help supplement your fact-finding process. The middle of the form allows you to record the client's current assets, CDs, money markets, annuities, whatever. And then you can show that if you move a portion of those funds not needed for daily living into one of our two products, the bump or increase they would see in estate value. The bottom of the form allows you to record the client's current income. That way you're sure the client now and later will have enough income to live on. But at the top of the form, again, are those key questions. Same questions you saw in the presentation I just showed you, but if you're not using it, it's here. One of those questions, for example, is, Mrs. Jones, do you have money that you would like to leave behind for your family or favorite charities that's not needed for daily living? Well, most people get the leave behind concept, and if they don't, it's a great way to start a dialogue, isn't it? In our toolkit, we have another document that I want you to take a look at, and that's our single premium sales ideas. And all these ideas are detailed out for you. We talk about using the leave behind money concept. We talk about working that book of annuity business where the client you and I know is a lot of those annuities, they're never, ever going to annuitize it. Why not start to work with them and show them how to take that leave behind money and significantly increase in a tax-efficient way that money into what? Generation legacy. What about the older paid-up policies you run into where the cash value is close to equaling the death benefit? Why not do a 1035 if they qualify in the single premium whole life and give them a higher paid-up benefit? What about some of the old ULs where the cash values are going in the wrong direction? Maybe you can rescue those funds on a 1035 to single premium whole life and give them a higher paid-up death benefit. We talked about the burial concept. Again, the number one way that I've seen agents who weren't in the annuity side of the business get into single premium whole life in a big way. And then they really start asking all those detailed fact-find questions to find the money, because this is all about finding the money, doing the dollar dating daily ideas that we talked about. Living benefits, they're absolutely great to sell on any life product where the accelerated death benefit riders are involved. Again, long-term care insurance is still the absolute best solution, but as we know, seniors have a hard time affording it today. So there's a bunch of other great sales ideas out there for you to look at. And as you're reading this form, keep a blank sheet of paper beside you and start writing down the names of people that you can immediately go out and see tomorrow to talk to about these products. We have customizable marketing flyers out there for you in various varieties and graphic format, so that explains the concept of asset transfer, the features and benefits of the product solution, and then you can customize the marketing flyer with your contact information on it and print as many as you need. I've seen agents who said, you know, I've taken the marketing flyers, your secure solution presenter software, bought some coffee and donuts, and I scheduled a meeting down at the local senior center, not the assisted living center, the senior center that schedules the computer classes and the trips to the casino. They're looking for speakers. You can go in and do a 30-minute stand-up on the concept of asset transfer using these types of marketing tools in the presentation and get some great prospects. We have print ads if you like to use print advertising. We have letters. We have letters and also mailers. So if you want to scrape the content off of these approved letters and mailers, you could essentially go right to your local lead house and start doing a mailing. We have phone scripts for you. We have third-party marketing, third-party, I'm losing my train of thought. Third-party materials out there for you to look at, articles, I should say. I just totally lost my train of thought. Third-party articles out there to help you in your marketing efforts. Sorry about that. So all this can be found on the agent website, and you click on the product toolkit again, and it will take you to this that I just showed you and just a lot more. So all that information, again, is there for you. We have our agent services line, but I tell you, before you worry about calling this one, pick up the phone and call Premier. Those internal wholesalers on that team, on Brian's team, are rock solid. They will get you what you need and help you, again, best position these product solutions for the markets that you're servicing. So, Brian, that's what I've got today. And, I want to thank everyone for participating today. But I'm going to give this one back over to Brian. Thanks so much.
Thank you, Gary, and thank you, everyone, for attending. If you have any questions, like Gary said, give Premier a call. Our number is 800-365-8208. Just ask for a life or annuity marketer. Thank you, and you guys have a great day.
Thanks, everyone.